We're really not sure. I mean, internally, whether or not this is going to have a lasting effect on the domestic spend, which, of course, has bbeen the main pillar of Abenomics to date. The trade balance, certainly as far as the current account is concerned, we think is structural. I mean, it's going to remain in deficit as, you know, the Japanese corporations continue to offshore. I think the yen would have to be considerably weaker than where it is today for them to bring that back onshore at any point. I think maybe if we move into Q3, certainly, you know, into the autumn, we'll have a little bit more of an idea of how resilient the Japanese consumer is likely to be. I think the main thing that gives us concern here would be, of course, the lack of wage growth in the face of what is a fairly large reduction in disposable spend. Obviously, the tax hike at up 3 points, and they're looking at maybe hiking it from 8 to 10, maybe in the autumn. So you may put even more pressure on there. I've been on before, and I've said it before. I think, you know, reducing the private sector's capacity to spend at this point in the cycle for Japan is probably not the best thing to do. Then again, we do have the budget deficit in Japan running just shy of 10%, which will offer incredible support, really, for spending as well. So it's a bit of a two-edged sword. We have to wait and see what the outcome is.
You mentioned, Mark, that the Japanese export sector continues to struggle, and that may require
Certainly
a yet weaker yen to re-engineer that growth on the external front. And that implies that the Bank of Japan's work is still not yet done. Are we going to see, then, further asset purchases?
I think that's right. I think at the moment you have a situation where there is quite a lot of worry, certainly, you know, in consumers in Japan, over cost-push inflation. So I think certainly for the time being, I don't expect Mr. Kuroda to do anything at all. I think we'll see the CPI year-on-year probably come down to about 1% over the summer. Mr. Kuroda has said, he's essentially said enough, said the same thing. So as we move into the autumn, if we don't see a pickup towards his target of 2%, then you will see him step up his purchases, maybe some more on the APP side, maybe some more ETFs, maybe some more J-REIT purchases, and certainly continue to buy JGBs all the way out along the curve to essentially encourage people to take more risk. I think it's probably a story for 2015. You couple that with the current account figures, which I think is in de facto deficit, if we extrapolate out 1, 2, 3 years, in which case you should see almost naturally pressure come on the yen to weaken in any case. You couple that with the monetary easing from the Bank of Japan, which will add a little bit of turbocharging to what is a general trend, and you may see the yen move out towards 110, 120.
All right, Mark, let's get to some investment strategy. You say Japan is cheap compared to the EU and the US. Would you still say that after the rally that we've seen over the last 6 weeks? And why do you want to take stock-specific bets versus sector bets?
Well, Japan is cheap. I mean, you can look at the metrics across the board. We're looking at, what, PE 13 to 14 times. We're looking at price book of 1.2, EPS growth of 16. I mean, this is far in excess of what you're likely to find in either Europe or the US. So certainly there is valuation support for Japan. I think, you know, the poor performance of the market over the first half probably is people worrying about the consumption tax hike correctly. Now, when it comes to picking stocks, we think it is much more important, we think, to get your stock picking right than to go for the sector bets, primarily because of the dispersion. Volatility in Japan is, as it is everywhere, is incredibly low, and certainly being able to trade during cash market hours is very difficult indeed. So essentially the dispersion in intra-sector, if you will, is higher than the dispersion inter-sector.
Okay, if we look at flow data, foreign investors buying massive volumes of Japanese stocks, I thought the domestic investor was coming back. If we've got both sides coming back to the market, that's a very bullish sign, isn't it?
I think so. I think certainly on the flow side, you have to take a kind of bullish stance here. I mean, certainly with the GPIF and, you know, the big gorilla here, 1.2 trillion. And, you know, it's kind of sister funds, the bureaucrats' pension fund, and also the teachers. I mean, these guys can come in size, and if you do have, obviously it's one of, you know, or it's a portion, shall we say, of Abenomics' third arrow. is in fact to increase this allocation to domestic equities. These are big chunks of money that may come into the market here. So you've always got to be mindful of that. And if you're running a hedge fund, you have to be very careful on your short book in that scenario, because it is a pretty blunt instrument.
All right, Mark,
the cheap stocks, the expensive stocks, they'll all go together.